What's up, guys? Welcome back to another session today. It's been a little bit since I've done another YouTube video for you guys, but a lot of stuff coming out this week with this EV sector of stocks that have literally been booming these past 2 weeks, including like NIO. I've got a watch list actually of all these different plays that we've literally been playing this past few week, and it's been mind blowing the way that EV, solar, and some of these other sectors have been popping, even weed, Bitcoin, things of that nature. But Neil been blowing up massively and had a big pullback on Friday, so it's a little bit interesting to see how we'll play out probably this next week. We did bounce off pretty well when you look back at this 5 minute time frame a little bit here. Did seem to bounce off down at this area right here. And I've got my volume by price shelf here so you guys can kind of see what's going on. But pretty insane move on NIO these past few weeks, and options have been banging hard. So hope everybody's been doing very well on these. Another stocks that we've been kind of playing lately has been Plug. You see the very similar chart pattern as NIO right there. Plug has been a very cheaper one as well, and it's been making all-time 52-week highs. I can pull it back here on the daily, and you guys can see very similar move that NIO has been doing as well. Another stock that you guys may have not been knowing about really is XPEV, XPEV, same similar situation going on there. Not a lot of chart data on this one, being that it's fairly new as a stock, but I'll go ahead and pull up on the 30-minute here. I mean, it's been pushing up very substantially pretty well. And I mean, it does big moves. So options really fly. So this gives you a little action of what happened right here on, what was it, Thursday? Ran from 36 bucks, roughly gapped up, ran from 36 bucks all the way up here to $48. And that's an insane move. I mean, options were banging 500 around 500% plus on that. Then of course came back down Friday and did the same exact similar situation. If I go to the 2 minute and you see how similar it is to back to NIO's chart and Plug's chart. So those are the kind of the top three right now: NIO, Plug, and XPEV, that have literally been playing a lot with each other. You've got stuff like Solo that's been really doing pretty well. And in this sense, it's been hanging out pretty decent as far as not following the same line that NIO did Friday. But Solo is, it's a little Canadian car, single person car company. It's a little weird if you guys Google it that. Not really a fan of anything they do, but hey, if there's money in the stock, I'm going to play it. Other stocks here, let's see, PLTR, very similar chart to kind of what Solo did. Very nice push on PLTR. They had earnings the other day, didn't seem to hurt it or phase it much. But very similar situation as XPEV there, being that it's a pretty new chart. We've got stocks like Blink. These things are going to start getting action as we go on throughout the coming weeks and so on. If electric vehicles is the future, guys, we got to play this money, and it's there. We've even got stuff like, what was it, FSR, which is the Fisker stock that's been getting a lot of raving. A lot of different situations, obviously, been going through that entire merger that they've been going through, and it's had these crazy spikes from pump groups and then back to some serious dumps. But to have a massive comeback as it is, obviously with EV sectors on fire, this thing could obviously crack up here and probably push above 1827. We've got 2045 and so on as far as some of these highs right there. So it'll be interesting to see how we push through this week on this one. I think it's got a good chance to kind of chase along with it as well. So keep an eye on this stuff, guys. LI is another one too. Big pullback on Friday as the EV really took a break. So very pretty amazing week this week, and a similar chart to NIO as well, where it's a big downturn with a slight bounce, but nothing substantial. So we'll see what happens this week on a lot of this stuff, and see if we get good comebacks, if they're going to play strong, and so on. But anyway, guys, I wanted to cover a little bit here on TrendSpider, and also had a lesson for you guys tonight that I'm going to go ahead and share with you. But TrendSpider right now is having a massive sale on their software. They've started off at 65% off, and they're knocking off 1% every single day, all the way down to literally like 0%, I'm thinking. So their biggest sell, obviously, this year. And guys, this is a lifesaver of a tool. I can't stress it enough. I mean, this is literally everything, my lifeblood for building charts, mastering charts. And I'm pretty blank as far as, you know, making just a blank chart and going from there. They've got all this stuff right here where you can throw in auto trends. There's a lot of useful tools on there. There's a lot of even useful scans that you can guys throw up here. You can do a market scanner, and I've got some different scanners here. Like if I want to fly five or find like a 20-day breakout on the S&P 500 right here, I can literally pull up my scan and hit scan and see if it pulls me any stocks that had a, you know, a 20-day breakout. And in that sense, it doesn't show like we've had one, maybe a 52-week high breakout. Let's see if we find anything there. Oh yeah, there's a few right here. So as you see, this chart has been pushing up, and it made a new 52-week highs up here. This one as well. This one as well. So it's cool to have these scans that literally just pick it off of a chart setup versus, you know, just something crazy like a first red day, different situations like that. But there is a lot of useful content on this platform that it's been phenomenal to play with. And of course, a lot of tools where you guys can draw trend lines. It makes it easy to kind of play with. And of course, they've got different sets of how you can draw these trend lines. They got the log here where you can curve it up, curve it down, however you want to. Horizontal lines that make it really impactful to know those opens and closes on the daily candles. So, you know, we can play with some serious hard resistance and support zones and things of that nature that I know where I can have a potential bounce. And of course, you see this all on a daily candle, but I put this thing back to a 2-minute candle, and you guys are going to see what I've just literally drawn on this 2-minute candle. So obviously up here, those are those 3 lines that just drew on the daily candle. But let's say I want to surround that current day's events, which was Friday right here. And you guys can very easily see, okay, we've got support. Let's see, we've got a low of right there. We've got a high of right there. We have an opening price of right there. And of course, the closing price of where it's at right now, 722. Now I go back to the 2-minute chart, and you guys are going to see exactly what those highs and lows were based off of that daily candle. And voila, here we go. These little white lines. So, of course, you can change the colors if you guys want to, you know, have a preference of colors and things of that nature. But very useful information, guys. It's an awesome software to use. And I can't stress enough, I'll put a link down in the description below. You guys can sign up on this stuff. If you go through my affiliate link right there, obviously I get a little bounce back from it. So highly appreciate you guys hitting that and getting to sign up. It is a 7-day free trial with this as well. So you don't even have to pay for it for another week. But the guys are very helpful here at TrendSpider to give you guys all the information to get you guys going. And if you guys got questions too, I've got videos on this software. If you go down some of my videos on YouTube here, or even I'm more than happy to sit down with you guys and kind of, you know, show you through of how I use it, how I have my settings and so on. But anyway, guys, what I want to talk to you guys about emotions and breaking habits and different things of that nature with stocks right now. We're going through really the craziest market I've ever traded, being the entire year of 2020. You know, for the whole thing of COVID, the pandemic, elections, you know, all kinds of different crazy chaos has happened this year. And of course, it's not been easy for traders this year to be able to, you know, play with the markets, change their habits of how they're, you know, jumping into some of these trades. Some people have blown up their accounts. They've lost a lot of money. Sometimes, you know, some guys have actually come on top, have made, you know, their best year yet. So these habits, guys, and the emotions that evolve around some of this stuff, it all plays with us differently. And I teach this to my students every day, you know, how we can try to master around these different situations, how we can analyze the market properly, how are we charting our plays correctly, how are we using our discipline and patience in order to get in or get out when the appropriate time is there. So, you know, stock trading, to be consistent with it, is literally a series of, you know, waiting. It's a series of timing just right. You know, if let's say you jump in a play and, you know, you have to jump out due to a loss or, you know, stop or whatever it may be, only to find it run 10 minutes later, you know, it just gives you an idea that you were not, you know, inspecting the elements correctly. You entered probably too early, causing the situation to go against you. And of course, get pissed off of the play. And of course, our mindset of how we approach this stuff is so different. Everybody has a different attitude of how they want to approach it. And if it works for you, that's great. But I want to go and cover this stuff. It's kind of a refresher, a reminder of how we have to approach our systems this week. approach just everything in general in life, guys. I mean, nothing is perfect. Nothing is going to be, easy making money every single day. You're going to have some serious inconsistencies, obviously, with markets changing. You have to adapt to that change. You have to be able to, jump to the different sections of what life throws us at. And it's pretty astronomical, obviously, what this year has brought upon us. But how to obliterate these bad trading habits? Okay, some people come in, they've got these series of habits that they cannot break, and they know it's killing the way they approach a trade. It's killing the way they, understand a situation. It's like, man, I've got to, have a better system, a better, a knowledge of why I'm getting in this play, why am I losing all this money, why am I not understanding what I'm doing? And it gets frustration. You're building that compound of negativity in your system, and it's just it's chaos. And of course, it's nothing but gonna wreck yourself, wreck your account, wreck your consistency whatsoever. And people give up. It's not easy. Nothing about trading is easy, but man, I can't tell you how wonderful the life of freedom that it does give you once you get to that consistency of levels that you can literally attack the market any day you please. And it's all about building these habits. It becomes a default setting to us. Without that default setting, obviously, you're just fighting your demons, so to speak. So regardless of all this inherent inclination, humans are amazingly capable of change and adaptation. Below, I've got some 4 easy steps you guys can take to obliterate these 4 bad trading habits. But number 1, okay, you've got to write down these bad habits you're trying to quit. Okay, I can't stress that enough. Somebody comes in, they're like, man, I'm doing this, I'm doing this, I'm doing this. I know what I'm doing wrong, but I just keep doing it, blah, blah, blah. I'm like, you've got to write this stuff down. You have to tell yourself that, okay, I'm jumping into my plays too early. I'm jumping out too quick. I don't know why I entered the play. I just saw a green candle and thought this thing was going to run. You've got to have that. You've got to have that reasoning why you're jumping into position. You're risking your money on the line in order to approach a play, in order to, indulge yourself into taking that position, only to come out with a very unsuccessful event. So the thing is, number 1, okay, you do not have to write a serious, novel. Just list down those bad habits and then pick the ones that you will work on. You have to work on this on one stretch at a time. Now, whether you're trying to let your winners run or you're sticking to maybe a risk parameters, you got to start simple. Okay. Many traders fail to change their habits because they want to change too many things at once. Okay. We end up overwhelming ourselves way too much. And it's like, man, I've got to focus on one thing at a time. Overwhelming is just going to cause a lot of stress and trying to do everything at once. It's going to cause a lot of, conflict with yourself that, okay, what is it I've got to work on? You've got to take this slow. First of all, you got to have positions small too. If you've got not a consistent pattern together, you've got to trade small. You've got to protect that capital. So don't overload yourself. Just work on changing these 1 habits at a time. Okay. Number 2, let's list those trigger points. Take some time to think about the things that make you crave doing your bad habits. What is it that makes you crave doing these bad habits? Is it, the FOMO emotion, the fear of missing out? You see a big move and you have to jump in. Is this a trigger that causes you to make a bad habit? If you find yourself tweaking your trades, maybe you're just tweaking something in and out and you're just all over the place without, understanding the remedies to your situation, is a result of you need for certain. Okay. So if you prepare an action, if you fail to prepare that action, you have to plan before each trading session. Is it because you feel lazy? If you can't seem to let your winners run, is it because you're thinking about the mortgage or the bills and want to book a quick or sure profit? Now list these trigger points down to next each of those bad habits you wrote down. Okay. So now let's got your notepad. You've got your bad habits wrote down. You've got your triggers wrote down. Now we've got to add a little extra element here to see if we can solve one thing at a time. Okay. List them one thing at a time. Number 3, you've got to substitute those bad habits with good habits. So we have to change that default setting that's in our minds. Basically, you want to teach your brain to suffocate your bad habits and instead feed those ones that you want again through repetition. Okay. So you're writing it down. You're obviously not just telling it to yourself. You're writing this down and you're causing your mind to really think about the words that you're putting in place. And you're going to start having to do repetition of defeating each one of these habits. Again, repetition, hands-on, being able to overcome that every single step of the way can really start to build these default settings in our minds. And it does take time. Okay. It's not going to be tomorrow. It's not going to be the next week. It could be, you start seeing it in a week or two, or sometimes 3 weeks before you finally get that repetition, but you have to work on it one thing at a time, guys. So here's an easy way to do that. You got to write that substitution next to every one of those bad habits you wrote down. For instance, if you tend to tweak your trades and mess up the outcomes, you place your trades as per usual, but then go as far away as possible from the computer screen. You place some contingent orders, then go out and do something else. The more you do that, the easier it gets until it comes to a time when your brain finally accepts that new habit as the norm. Okay. It'll become a default setting, so to speak. Now, different scenarios here as well. Do you want to keep your trades on longer? Then you have to trade small. Do you want your to be more faithful to your plans? You got to have that trading plan, then trade small, guys. Do you want your emotions to fluctuate less when you place and manage your trades? Then you have to trade small. Do you want losses not to affect you that much? Then you have to trade small. Okay. Obviously, when your money's on the line, you're flaring up those emotions, and it could be too much money. It could be, a different situation there, but you have to keep them small as you're tweaking this, so to speak, formula that's going to work for you. Okay. You're getting rid of these bad habits. You're working on these good ones. Your default settings is going to be better. And of course, you have to start out small when all this is taking place to preserve that capital as best as possible. But with trading everywhere, guys, risk obviously is going to play with everything out there. Okay. There is no such thing as no risk trading. So by trading small, you get to practice these good habits. The more you practice those habits, the better you'll get at them. You'll develop these certain skills, overcome the basic fears, gain confidence. If you're not trading small, it'll be very difficult to do so. Okay. Why blow up your money and play big and try to rush through this process as fast as you can? I mean, this is a lifelong consistency. It could be a retirement goal. It could be a career change, whatever it may be. It takes time, guys. You have to put in the work. Any laziness is really going to mess this mojo up for you, so to speak. So then let you get better. Okay. Shouldn't you rest on your laurels and stay in your safe and comfortable little bubble? You should seek to increase your size incrementally so that you're consistently challenging yourself to grow stronger, more resilient. Okay. So as you get better and better and you get these default settings in your mind, it's going to start working its way better and better and better. Okay. So bonuses here, guys. I'm going to break down some of these habits that are really, trigger points for us. And some of this may resonate with some of you guys. Some of it may not. By all means, if you're watching this video, I highly suggest keep a notepad, write this stuff down. I'm here to try to help you guys get through this process as best as possible. Number one here. Okay. So unless your friends, family, or anyone close to you could even do it online via forums or social media or chat, tell them that you want to eliminate a certain habit. Okay. There's people have common habits in mind most of the time here with trading. Just a simple act of letting people know about your difficulties, make them not so difficult anymore. Opening up will empower yourself to raise yourself above those difficulties. Okay. Here at Magic Tickers, our chat room is very neutral. Okay, guys, we respect everybody that comes in through the room. We're all about helping you. We're all about helping new people to overcome this stuff. That's nothing about a pride level. We got to stay humble. Markets are there to either help us or hurt us. So why would you want to be acting like the big dick swinging around and no one's there to hurt you, so to speak. It's all about building each other up, keeping that family unity, so to speak, and making everyone be able to journey through this process. So patient with your winning trades. Okay. This is enormous, and being enormously impatient with your losing trades. Okay. I'm killing that stuff bad. Okay. If there's a setup that is no longer within my reasoning of buying in the first place, you have to kill that play. You have to understand why I'm jumping into this situation. Okay. I see it's going to break out of, X pattern here. Look for X, such and such target. Volume looks safe. Level 2 is pushing up here. Market looks like they're buying this. It looks like it's going to break out of this resistance, and it does, only to maybe fail the breakout. Okay. You may have a situation where it fails it. And then that thing, you have to come back to it. It's like, okay, it failed the breakout. It's coming back down. Why are you still holding the play? You have to be impatient, kill that situation, jump out of it. There's no reason to be riding it on the way down. Okay. When patterns fail, they generally fail for a good period of time before even attempting it, maybe later on. As traders, guys, there is no guarantee to a situation. We're speculators. Okay. With time and consistency of understanding chart patterns and things of that nature, we become master speculators. Okay. We're speculating the move will do such and such and such. Okay. We're seeing the setup prepare itself. We're seeing it work itself. And then we go to the situation of, okay, well, it's time to play this situation. It's going to work out in my favor. I see it working out. I'm speculating that the play will do such and such. Now let your winners run, cut your losers short. You work so hard to find a setup. You wait so patiently for your entry. You nervously put your money on the line, but then you wrongfully look to exit as quickly as possible. Who's been there? If you're going to go through all that hard work of finding a trade, let it work for you and pay you for that hard work. Sure, there's going to be moments you're uncomfortable in trades, but you should never play in such a nervous level. Okay. You should never play with such an emotion that just makes you scared stiff that you're going to be wrong on the situation. Okay. Even after finding it so hard, you have to have that confidence. You have to have that understanding of what is going on here. And that's why I go back to this: trade small. You're not flaring up that emotion of what could happen. You're playing a trial and error. You're tweaking your system here. You're getting to the point where you're understanding what you're doing. And when you're playing small, you can practice and get out there. Even if you're, playing a paper trading account, there's nothing wrong with trying strategies out and getting to a plan that really is starting to see some consistency with. Number 2, making money is more important than being right. I can't stress that enough. Some people are, they come into a trade and they're like, man, I'm so right about this. I can't say I'm wrong about it. I'm too proud to say I'm just, wrong about this trade. So we're all in this game in order to make money. Okay. At the end of the day, that's what matters. Part of the process is taking losses and being wrong and accepting that as part of the game. The goal is for your winners to be larger than your losses and end up on the plus side of the end of the day. Okay. So you take a trade, you're up 20%. You take a trade, you're down 5%. You find no reason to hold that play. You kill it. Okay. You're still up 15%. Okay. Why not? What's wrong with that? You've got to have that plus side of the trades to, keep being a stronger growth versus the losers. You cannot hang on to those losers in hopes of winning something back on it. Okay. Hope is not a trading strategy. So many people come to the market. I see them in the chat rooms. They come to this point. They're like, man, I bought this setup. I'm hoping it bounces today. Oh man, I'm red again today. Well, I'm going to hang on to it and I'm going to hope it's going to bounce again tomorrow. Oh boy, I'm down some more the next day. Man, I sure hope it comes back. I'm about to just, really give up this whole trading thing. Hope is not a trading strategy, guys. It's not a trading strategy. If you're in that situation of always hoping on your trades, then please, guys, I've got classes on this. I'm going to help you work through that. No hope should ever be in your vocabulary when it comes to a trade. I have a reason A of why I'm in it and plan B in case I need to get out of it. Plan C, cut losses, things of that nature. Okay. There should no reason be of hope. Okay. We're speculators, but I'm not about that game of jumping in a play and hoping it works into my desired way. Okay. Markets trade as they will. They don't give a crap about what you think or about what you hope. Okay. You can hope all day long, but the trade is not going to go if you just keep hoping. Number 3, look at the technical analysis as a picture of where traders are lining up to buy and sell. So I'm always looking at those support and resistance, understanding those channels. TrendSpider makes it very easy for me to see those channels, how to draw them. I'm constantly keeping that data on hand so I see it. Where are the buyers and where are the sellers? That's all I'm looking for, those buy zones and sell zones. Am I shorting at the sell zones and dip buying at the buy zones? When you look at support and resistances, you have to realize this is where other traders are looking to buy or sell, and you're wanting to go along for the ride. Okay. It's all about the common ground of where buyers and sellers decide to take the stock up or down. There is no such thing as hope. Okay. None of these guys are saying, man, Mike's over here buying this play at such and such. I'm going to hope that it plays out. And let's all just make it work in his favor since he's hoping that it does that. Just trading doesn't work that way, guys. Number 4, before you enter, know where you will exit for a gain or for a loss. I have targets too. Okay. No target should be astronomical. Okay. You have to have a very conservative target. I reach my targets pretty well. There's sometimes I fall short, and there's sometimes, man, I was, too quick on my target to where it just went far beyond. Thursday, I had a target of NIO to hit $47. It hit 49.5 on Thursday. My target was for it to jump out the gate. What was it, around 44, 43, something like that, and get to 47. I traded it all the way up to that point and left a few on just in case we got further. Few option contracts. We went all the way to 47.5 or 49.5, excuse me. So pretty crazy situation there. So you got to play that setup, with a conservative target to see what could possibly happen with it. Know your plan and work your plan. Whether you enter the trade, you don't have control over the markets. Okay. We can't base ourselves on the hope again, but merely are reacting to what it does. Thus, as the market goes in your favor or against you, you must have those rules that you stick to instead of making your plan up on the fly. Know how much you are risking, so how much you have to potentially gain. Is it worth it? Number 5, approach each trade with the same mindset you did on the previous losing trade. Now, this comes down to all of those habits that we talked about in the beginning. Okay. Make sure you're building some stuff on this habits. Use this stuff to help you. You can't always be right. Okay. We're not always going to be right. It's all about how are we making money, not if we're right about a trade, but if we're making money. When you take a loss, don't let it affect your decision-making process when taking that next trade. What this leads to is skipping valid setups or taking invalid setups. How often do you find yourself skipping the winners and maybe taking the losers? You think everybody's out to get you, so to speak. You have to take every trade and stay within the same clear-headed mindset each time. If you don't have a clear head, you have to take a break. Don't revenge trade. If your losses are affecting you mentally, consider trading a smaller size. So when a loss happens, and they will, okay, losers do happen, you won't be crippled by that loser. Okay. Number 6, use naked charts. Focus on those zones, not the exact levels and targets, but the more complexity you add to your charts and your trading plan can cause what they call analysis paralysis. Okay. I see people that post up charts with 1.5 million studies or indicators up there on there. And they're like, man, I'm waiting for the Bollinger Bands to squeeze, and I'm waiting to see the RSI turn positive or MACD flip, or the 200 EMA bound. I'm like, man, I'm confused. I'm lost. I'm cross-eyed here. You've got all this stuff on your chart. I got to see a candlestick. I got to see what these things are doing. I want to know where the buyers and sellers are at. I don't want to see all your indicators to see where you think the buyers and sellers may decide to do or not to do. Sure, that stuff is useful to a degree, but don't let it cloud your judgment on a play. Let's just say an RSI is not showing oversold, but a stock is bouncing on a certain EMA or something. You're like, well, the RSI is not low enough. I'm waiting for cheaper, and it bounces and it leaves without you, so to speak. There's situations I've seen where people will buy puts just because an RSI is near 80 or something. RSI is way up there, and like, man, I'm buying puts on this stock, and the stock just ran another $10. It's just going. You can't predict momentum to all of a sudden fade because the RSI is at the tippy top and it just keeps on going, and the RSI is screaming through the roof. That doesn't mean the stock's going to come falling down. Sure, some stocks it does, but not every stock is created equal. It's not going to determine that. So it all comes down to understanding the market candles, the chart patterns, the reasoning why players are doing what they're doing, not based off of indicators causing your analysis paralysis. Okay. So where you have too many signals, indicators telling you different things, keep it simple. You have to stay focused. The market is rarely exact and usually finds support and resistance at areas of price rather than an exact high or low price. So keep that in mind when looking at swings or areas of support and resistance. Where are those buyers and sellers looking to bounce back based on that historical data on the chart? Number 7, realize that being uncomfortable is okay. Okay, we get uncomfortable. Even with experience, you will still be uncomfortable. Okay, I get into trades and I'm not always comfortable, okay, there is no such thing as having a really great comfort level within your setup. If you're comfortable in a trade, guys, then you're bag holding, okay, and the thing's just going, it's a matter of time. You're going to be very uncomfortable not locking in profits. No one likes to take a loss and feel like they made a bad decision, even with experience. However, when things get tense or stressful, you need to have your plan to rely on, which will keep you clear-minded when making those decisions. The only emphasis, the necessity of a trading plan that outlines what you will do when emotions are clouding your judgment. Trade markets that fit your personality. Trade markets where you feel like a participant and not an onlooker. Okay. Some markets are slow and steady. Some gap around and move wildly. Some have small ranges. Some have huge moves. Depending on your personality, some markets won't fit your comfort level, and that's okay. There are many markets to choose from. Okay. So guys, pick something that's slower pace if you're still struggling. Something like Apple. Apple's pretty slow sometimes. But some of these stocks, they're slower pace. Choose something that is really going to play in your realm of understanding first. Stop trying to pick the top and the bottom. Okay. This is another bad habit. Some people come in the market and they're like, man, I'm waiting for the bottom, and they miss the bottom. I'm waiting for the top, and they miss the top. There also goes back to the idea of making money over being right. Okay. I don't care if I got the top. I don't care if I got the bottom. If I think the stock's coming down at such and such point, then I'll play it down right there. Your analysis may tell you that the market will bounce or fall at a particular spot, but you must let the market tell you that it is. You got to have that confirmation that this is actually what's happening. It's tempting to enter at tops or bottoms with the idea of being right about where the bottom or top is. However, let the market tell you are right by waiting for that proper trigger or waiting for the other signs of a trend to break will pay you more than times that you're wrong. Number 10, stop thinking about something being cheap or expensive. Instead, will it go higher or lower from here? Okay. That's the same thing when it goes back to RSI or oversold, overbought conditions. Like, man, this stock is way too expensive. There's no reason it should be up here. I'm ready to start shorting it, only to see it come, go up, 50% higher. Okay. I can't tell you how many times I saw this with Tesla before it was split. How many times everybody thought, man, it's so overpriced. It's so expensive. It's at $1,000. There's no way it should be up here, only to see it run another $1,000. And they're freaking out like, man, why is it running? It's squashing every short along the way. Okay. Never come to the market thinking about something being too cheap or too expensive based on your indicators, based on your personal opinion. We're speculators. We can't think of it that way. We have to decide, what is the market doing? What does it look like it's doing? I don't come to the market with an opinion on what I think it should do. Okay. I'm going to let the market tell me, and I'm going to trade based off of those market conditions, whether it's in the moment or not. And there's been many times where I'll play calls and puts in the same day on the same chart many times again. Okay. No matter what something is priced in, it can get cheaper or more expensive from there. Here's another example. Okay. So before the 2008 crash, Ford, the stock symbol F, was priced at $8. Okay. And surprisingly, it's around $8 still. But during this crash, it was down to $4, which looked very cheap compared to where it was. However, it continued to go down to about $1.50. Okay. This was during the big, tech crash or whatever it was in 2008. So was it cheap then? Well, it could have gone down to 10 cents or even zero, but the opposite situation would have been when Apple was priced at $400, which seemed expensive, yet it continued to $700, a 75% gain. Instead of looking at something as cheap or expensive, instead look at the chart and decide what direction the trend is up and go with that trend. Okay. You have to follow the trend. Your trend is your friend. You can't try to time the top and be like, man, I'm looking for the top. This is the top, even though it's still in an uptrend, only to be squashed even further. Number 11, you have to be willing to change sides from short to long if the market tells you so. Okay. We can't have our own biased opinion and think it should do such and such, even though market is telling you one way or not. This also goes back to making money over being right again. If the market is telling you that the trend is changing, listen to it. Ignore what the talking heads are saying, maybe on TV, what news events are occurring, or what you want to do. Listen to what the chart is telling you. I've seen so many people panic out of a setup based off of something, that they heard over the news all of a sudden. Some news clip came out, man, I'm jumping out of this stock. It's going to hurt me. It's going to hurt my stock, blah, blah, blah. Only to see it just keep on going. Market ignores it. Okay. So just because a news clip or PR comes out doesn't mean the trade is over. What is market doing? Trade the news, trade the market. Don't just, base your opinion off of what you're hearing over news. Number 12, trade aggressively when trading well and modestly when they are not more aggressively to make up losses. Trading more aggressively when you're not trading well will only dig the hole deeper. Okay. When we're in a big booming market like these EV plays this past week, they're booming, they're pushing, the trend is up. I'll trade a little bit aggressively and make some serious capital on those moves. But obviously, if you guys don't have a consistent process, you cannot trade aggressively. Okay. And I'm more than happy to teach you guys how to work yourselves out of this situation. Number 13, realize the market will open again tomorrow. This is another big habit. There will be more opportunities, even if you missed one today. No matter when you start your trading career, there will be a long history of trades and missed opportunities that pass you by. Even on any given day, there might be a huge move that left without you. No matter what move or opportunity you miss, the market will be there tomorrow and there will be new opportunities. Okay. I can't stress this enough as well. New people come to the market and they feel like they have to throw their cash into just any trade out there. They don't care what it is. They have to throw it in some kind of trade and don't realize it's all about disciplining yourself to set up and wait for those positions to come into play. Wait for a setup. Just because it's 9:30 and market's open doesn't mean you have to rush all your money into the first moving thing you see. Okay. There's a reason behind setups. There's a reason why you have to use patience, discipline, understanding of why chart is ready to enter here, chart is not ready to enter here, and so on. Okay. Technical analysis. It's a beautiful, beautiful thing. And there's so much to it. Obviously, the more that I can cover in tonight, but there's so much to it, guys, that really it takes some serious understanding to throw all these elements together. And it's a beautiful thing when you have green trade after green trade. And sure, you have some losers in between, but the consistency of what this market can do, what this career path can actually do is mind blowing. It's beautiful. Number 14, never add to a losing trade. Okay. If you jumped in a play and you're already down, you're like, man, should I average down? I think I'll average down. I'll add some more to it. That's generally throwing bad or good money after a bad setup. Okay. This is how traders blow up or even wipe out their trading accounts. When you're on the wrong side of a trade, cut your losses and move on. Never try averaging up or compounding loss. Okay. Understand why the stock is going against you, why the stock is going in your favor, things of that nature. It's not about luck. It's not just some lucky coincidence you got on the right side of the trade. There has to be a real reason of understanding of why it's working in your favor or working against your favor. Number 15, making money is the goal, but don't let it cause you to force trades. Okay. If you're sitting bored, walk away from the computer. This is the biggest mind-blowing thing. Just walk away. Don't force these trades. If you follow your rules and still lose, it can still be a successful day because you followed your rules, guys. How many of you traders out there have rules to your trading? Many of them don't have rules. At the end of the day, when asked, did you have a successful day? As long as you followed your rules, you had a successful day. If you break your rules and maybe still make money, you got lucky, that reinforces your bad habits. Okay. So if you broke your habits and jumped into something or did something, then, you're going to start changing your default settings of habits back to your old ways. And that is destruction later down the road, which is a very bad thing. So how will you know if you followed or broke your rules unless you have a trading plan that outlines these rules? Have rules in place, guys. Have a trading rule. Write down those habits. Just like we talked in the beginning of this lesson, jot that stuff down. See where you need to have your rules at in place, because it's there to help ourselves grow a consistent path. It's there to, better put us on the right direction. Number 16, practice reading that right side of the chart. Where the chart is starting to build, make sure you're reading the right side up versus the left. It's good to backtest strategy by looking at the historical data, but ultimately to make money, you have to be able to read that hard right edge, the speculation of where it could go. Number 17, have an edge, something that gives you an advantage over 50-50. A lot of people want to jump in something, but don't realize the odds are just as likely against them as they are for them. Nobody likes a 50-50 chance. Okay. Often trading is compared to gambling. If you're a novice or don't have an edge, it definitely is gambling. Okay. At a casino, the house always has an edge where they will be on top given enough time. With trading, we want to be the house. We want to have that edge that puts us on top at the end of the day. Your edge could be a method of determining the trend, a way of determining support or resistance, a way of entering the trade, a way of managing a trade in order to maximize those profits are all of the above. Okay. You want to have that edge. Don't jump into stuff with 50-50 odds, when the odds are just as great against you as they are for you. Number 18, 1 or 2 trades a month makes their month. So grind through a bunch of small wins and smaller losses, but only a few make the month. Okay. We have those situations sometimes as well. Not every trade needs to be a home run. So stop trying to make every trade a home run. Being successful at trading is a long process that includes a lot of singles and some strikeouts, but it's the occasional home run that keeps us coming back for more. You can have a very successful career simply taking those small winning trades one after the other. Number 18, a losing trade is not a reflection on yourself as a trader. Okay. If you think, you keep having a losing streak or keep losing capital or whatever, it's not a reflection on yourself, guys. After doing all your analysis and you happen upon a picture perfect trade, sometimes the trade will still fail. Afterwards, it's easy to then second guess your technique or your rules and yourself. You must realize that losers are part of the game and that no one is a perfect trader. You'll have the streaks of winners and the streaks of losers, but the important thing is properly managing your account to not give up. Often you will hear stories about individual traders, typically from someone who is wanting to sell you something, who made amazing profits or had an amazing winning streak. What you don't hear is how they are doing overall over the long term. Are they still positive? How did they handle a streak of losses? And number 20, their business isn't trading, it's finding the right trades. Okay. Most all of our traders' time isn't spent being in a trade. Instead, it's finding the right trade. As mentioned above, after going through all the hard work of finding a trade, it's important to let work for you and pay you for that hard work. Trade the reaction and not the news. Okay. This is an important thing, especially to like earnings report plays and things of that nature. What is the reaction on the stock? Sure, if they lost on earnings, but the consensus was, if it beat the consensus but still lost on earnings, it's going to run. Most of the time, it generally does. When news events occur, it's easy to form an opinion on what that means to the market. However, no matter how we think the market should react to a particular news event, it doesn't make it so. Out of all the individual and computer traders out there, it's impossible to predict how everyone as a whole will read that news event. If it's bad news, it may not be as bad as they were expecting, so it's interpreted as good news, etc. It's important to realize that we as individual retail traders cannot move the market. We can merely react to what the herd is doing, okay? So we're trying to trade along with what the herd is doing. 22, they write down every trade and keep in a trading journal. This is an important thing, guys. I've got a software here I'll show you guys in a minute for trading journals. Keeping a trading journal is a great way to improve your trading, okay? So with a record of your trades, you can see the information. For example, you may make maybe most of your money on Mondays. So trading larger sizes on Monday could increase your bottom line, or you may maybe struggle on Fridays. So trading smaller sizes, not trading at all on Fridays could help your bottom line. Perhaps certain times of the day or certain times of the month produce better trades. Having a trading journal is another way of having that edge as well. This list is no way an exhaustive list, but hopefully it can help break you from some of the bad habits or create some new good ones, guys. That's all I wanted for you guys. But today I want to go ahead and show you this trading journal. Okay. This is with TraderSYNC. You got a free 7-day trial. I'll post a link in the description down below. But this is an awesome software, guys, to help you guys pretty much pinpoint your data. Okay. You got to have software that shows you what days are good, what days are bad. How well did you do on trades? How long were you in these setups? Was there certain times of months that are better? Do you play better on the bullish side? Do you play better on the, the bearish side and so on? But there's a lot of cool content in this stuff. I advise you guys definitely try out the 7-day trial. It's free. At least give it a try for a week. See if you like it. If you don't, just cancel it. You don't even have to have a credit card to sign up for it to get the 7 days. So give it a try. See what you guys do. See how it works for you. And hope that helps you guys out as well. Anyway, guys, wanted to just throw one more thing out there. We've got a sale going on right now for our live stream chat. We also have a 7-day trial as well. So if you guys do want to try it out, feel free to check it out. It's $75 a month now with a free 7-day trial from our normal $125 a month. And of course, we got our live stream classes coming up too. The 3-month classes right here on the website. I'll post the link down in the description below. We got that even 40% off right now. If you want to play in with the classes where I teach you this stuff every single step of the way, guys. There's a lot of information out there when it comes to trading the stock market. It's a lot of stuff to take in, and I work through these, my students every single day from Sunday through Thursday nights, going through the technical analysis, going through the emotional process of trading, building a trading plan, building a trading journal, helping you with your trading rules, understanding the fundamentals and the catalysts and the filings of stocks. And of course, after every 3-month session, I let every student have the next 3-month session for free and so on. My goal in this process, guys, is to help you become consistent traders. Okay. It's a process. It took me a long time to finally get to where I am today. We've definitely have some nice full-time students out of the class now, which I'm grateful for, but it was a process for them to get through there as well. It's not easy. It does take some work, but with you there, guys, I'm more than happy to mentor you through this process one step at a time. And I hope you guys found this video useful. If it does, please hit the like button, follow, subscribe for more, guys, and I'll definitely be posting in the future. But anyway, guys, hope y'all have a fabulous evening, and let's freaking slay it this next week, guys.